you can get a good deal is number one. Now, what does that mean? Can you get a good deal in regard as when you're talking about price or when you're talking about rent versus own? It is still cheaper to buy a house than it is to rent a house. And there are a lot more options out there to buy than there are to rent. I think the rental vacancy rates are less than 1% right now.
Yeah. What else does it mean? Everyone's going to be like, well, it was cheaper to buy last year than this year. Well, the problem there is that we don't have a hot tub time machine where we can go back in time and buy a house last year.
Right.
Right. So then
You don't?
I don't. Do you?
Yes.
So the question there is when you can get a good deal. So then the comparison is, what does it look like to buy today? Or let's say you're going to sign another year lease and you're going to buy next year, right? The deal is today then, because everyone in this room has agreed that home prices will continue to go up. So even though interest rates are creeping up, home prices will continue to go up. And now if rates are higher too next year at this time versus now, it's kind of a double whammy.
Yeah.
So when you can get a good deal, that's comparing now versus buying, next
year. A year from now. And we run that comparison on the cost of waiting. And it's significant. I mean, on a $350,000 home, it's like $60,000 is the cost of waiting 1 year. If you take a look at the appreciation and the likely higher interest rate. So it's a big deal.
Well, and then add on the opportunity cost of a year's worth of appreciation you missed.
Yes. Appreciation. You've got your principal buy down. Rents double every 20 years. So the rent that you're paying $2,000 a month now in 20 years is going to be $4,000 a month, where your principal and interest payment won't change for 30 years if it's a 30-year fixed mortgage. So that's number one on the list. Number two on the list, mortgages are still really good. People get a little worked up when they've been paying 3% interest rates for a couple of years, and now they're closer to what, 5?
Yeah,
a little bit before. Yep. 5, a little bit before.
5 right now.
The reality is 5 and under, folks, is a really good interest rate. The average 40-year fixed interest rate is 8.25%. So if you take a look at the last 40 years, the average rate is 8.25%. We're at 5. That's still a really good rate.
Yep. You want to guess what it was in 2000, the year 2000, what the average 30-year fixed was?
8.5.
Big guess, Steve. Remember?
9.
Want to take a guess, Jackie?
10.
Close, like 7.75.
7.75
was the average for the year of 2000. If you take, that the entire average for the entire year. So 7.75 in the year 2000, which is not that long ago.
Nope.
We're sitting at 5 today.
Yep. Which is good.
Pretty attractive.
And then there's ARM products that we're going to talk about next week on the show. Some different ARM products, or they're not called that anymore. They're called
the hybrid fix.
Hybrid. So they're called hybrid. Yeah.
Love that term.
I'm like, hey,
hybrid.
ARM's coming back, and Mike's like, no, there's no more ARMs, but there's hybrid fix. I'm like, well, isn't that the same as an ARM? Yeah, but that's not what it's called anymore.
Well, the ARM's got a bad name back in the crash, right?
Yes.
Everyone blames it. Like, I sent an email out yesterday to the team that you guys saw about adjustable rate mortgages, and I even got a couple emails back like, oh, the ARMs caused the whole bubble back then.
Yeah.
I'm like, no, it wasn't adjustable rate mortgages that caused that.
Right.
It was either A, people not understanding how they worked.
Yeah.
B, loan officers not explaining them correctly on how they work. So then the customer doesn't know how they work and then gets themselves in trouble. Like, ARM products were not the issue.
Right.
It was not understanding or not getting them explained very correctly is what the issue was.
And there was negative AM products back then. World Savings was a bank that offered a 1.9% interest rate, but then but you're adding to the principal every month.
Your payment was based on a 1.9% interest rate, but your actual interest rate you're paying was 6%.
Yep.
So when you make it's like a credit card minimum payment. If you make your minimum credit card payment, you'll never pay the thing off.
Yep.
And that's the same way basically that mortgage was like, hey, we can give you a super low payment that's manageable, but now the difference between your 1.9% interest rate and your actual 6% that you're paying, right, gets tacked on top of the principal every single month. And so your loan balance actually goes up versus down.
Isn't that insane? I mean, it's so wild that product was available back then.
But but then the loan officers saying it's like, oh yeah, your rate's 1.9, and here's your payment.
Yeah.
You know what I mean? And then the conversation stopped there.
Forever.
Yeah, right. Yeah, literally forever.
All right. Number 3, you can save on taxes. Number 4, it will be yours. You're buying the property. We're renting. You are simply, you're buying it for the landlord. Number 5, you can get better homes. Talks about that there's more homes for sale. Even though we have a historically low inventory right now, there's still more homes for sale than there are for rent. A lot of those are newer. than the homes that are for rent, and there's more of them. Number 6, it offers some inflation protection. Number 7, it's risk capital. This is talking about if the economy picks up, you stand to benefit from that, even if your goal is just to have a nice place to live. Number 8, it's forced savings. A portion of your payment every month goes to pay down that mortgage, that principal balance, which increases your equity. Number 9, there are more homes to buy than to rent. We talked about that. And number 10, you get to work with Minnesota real estate team and Michael Overson. Those are the top 10 reasons to buy in 2022.